In this presentation, we will discuss self-employed income or sole proprietorship income that will typically be reported on a Schedule C. When we take a look at our income tax equation, we're going to say we're back up here on the income line. However, it's a little bit confusing, a little bit more detailed than that, because when we're thinking about this income tax equation, we're typically thinking about the first page of the 1040 and what will be reported there. The Schedule C income will be reported as income as it flows into the first page of the 1040. However, the detail will be reported on the Schedule C, and when you think about the Schedule C, it will have both the Schedule C or sole proprietorship or business income as well as the related expenses, which are deductions. So, in other words, although on the first page of the 1040 it's going to be reported in the income section, we will have on the Schedule C both income and expenses, which are basically income and deductions. They're going to be business deductions that will be reported on the Schedule C. When we have a Schedule C, a sole proprietorship, it does add a lot of complexities to the return. So we want to consider all the different things that are going to be related to the income tax return when we have a self-employment business. What are the things that are going to be changing on the income tax return? So we'll start with page 1. So the actual business income and expenses will be on the Schedule C, which will then flow into the page 1. So if you look at the page 1 of the 1040, where will it be reflected? Where will the income from the sole proprietorship business be reflected? It will be here on 7A. 7A, other income from Schedule 1. So then for the detail, we're going to go to the Schedule 1. So now we're going to go to the Schedule 1 that feeds into the 1040. Within the Schedule 1 in line 3, we have the business income or loss. We're going to attach the Schedule C. So the Schedule C then will be the supporting documentation that feeds into the bottom line of the Schedule C. In other words, for the most part, the net income of the Schedule C you can think of from the income statement on the Schedule C flowing into the Schedule 1, which then flows into the first page of the 1040. So here's going to be a Schedule C. That's just a component or part of the Schedule C. In essence, the Schedule C will be an income statement. So note the income statement will have income for the business, but it will also have the expenses related to it. Expenses for tax purposes, often called deductions. So the expenses for the Schedule C will in essence be business deductions. The net income or the net amount, the net income or loss from the Schedule C is what then flows forward to the Schedule 1 that flows forward to the Form 1040. Now you might think that that would be the end of the story, but it's not. So the other things that you want to keep aware of when you have a Schedule C business is typically you're going to have the self-employment tax. So the self-employment tax is going to be on the Schedule SE. What is self-employment tax? It's Social Security and Medicare, and you could think of it as similar to the payroll taxes that you would be paying if you're a W-2 employee. In other words, if you're a W-2 employee, the money that's taken out of your check for federal income taxes or federal tax purposes will be 1, the federal income tax, 2, the Social Security, and 3, the Medicare. So those are 3 things that are typically taken out of a paycheck if you have a W-2 paycheck. Not only that, but then the employer will be paying the employer portion of Social Security and Medicare. So when you are a self-employed, a sole proprietorship, then the IRS is saying, well, we can't let you basically have the income reported as a sole proprietorship without feeding into the Social Security and Medicare programs. So in other words, you've put the revenue on the first page of the 1040, so you're going to be paying your federal income tax. That's what we're going to calculate on the Form 1040. However, we also want to be thinking about, and they're going to include the Social Security and Medicare, which they're going to be calling the self-employment tax now. Now remember, when you're thinking about the Form 1040, you're typically thinking about you're going to be paying the income tax, federal income tax, your federal income tax. You're not typically paying Social Security and Medicare if you're a W-2 employee, although you report the Social Security and Medicare because it's being reported to you on the W-2. However, you've already paid it typically because your employer is responsible of taking that money out of your wages and paying it already. So it's just an information type of system. However, here we're going to be calculating the Social Security and Medicare, and it's going to result in another tax. So, and not only that, but the Social Security and Medicare that will be calculated here is going to include both the employee portion and the employer portion. In other words, if you take a look at your paycheck stub for your W-2 wages, you will typically have 0.062 taken out for Social Security, 6.2%, plus 0.0145 for Medicare, which would be 7.65% taken out for Social Security and Medicare, not including the federal income tax. And then if I multiply that times 2, that's going to be the 15.3. So generally, you're going to have the 15.3. It's a little bit more complicated. You can go through the calculation here, but basically, you're paying both the employer and employee portion of the kind of payroll taxes if you were a W-2 employee, which here is going to be called the self-employment tax. And that's going to be calculated here, in this case, that being the $14,130. Now, note that this Social Security tax is being calculated on a separate form. It's not on the Schedule C. And if you were going to compare this to like a C corporation that had employees, they would get to deduct the wages for the employees as well as the employer portion of taxes. So in order to kind of be the same for a self-employed individual, we're saying, okay, the IRS is basically saying, we see you as both the employee and the employer, therefore you're going to pay both the employee and employer portion. However, we're going to take half of that, which is basically the employer portion, and allow you to deduct that, because that would kind of be similar to if you were a Schedule C type business. I'm explaining, this is my rationale of why the tax code would do this, right? So they're trying to make it similar to if you're a C corporation, which would be able to deduct the amount that they paid for the employer portion as well as the wages that were paid for the employee. So they're going to say now you have to pay the $14,130, which is the employer and employee portion, but we're also going to allow you to get half of that as a deduction on pay or Schedule 1, and that's going to be the adjustments for AGI. And we'll take a look at this in the tax software, and it might make a little bit more sense as we tie all this together. But it's useful to note here that if you are in a situation that you are considering being a W-2 employee, or maybe you have an option to run your own business and report your income on a Schedule C, typically reporting your income on a Schedule C is nice because you get the deductions, you get to report more of the expenses, which will typically lower your taxable income, but you want to really take into consideration the fact that you have the Social Security and Medicare tax, the self-employment tax, and it's higher than you would have as a W-2 employee because you're paying basically the employer-employee portion. So you got to balance those two things out. You got the self-employment tax, bad, but you also have the expenses that you may have more expenses that are going to be deductible if you're on a Schedule C business than if you were a W-2 employee that's basically spending money on expenses that possibly you're not going to get a deduction for. So this self-employment tax, the total tax here, is then going to pull over to page 2 of the 1040. So here's your actual income tax, what we're usually calculating on the tax return on the 1040, but now we have this added tax, other taxes including self-employment tax, which is quite significant on the tax return. So that's going to be an effect of the Schedule C. Also, if you go to the Schedule 1, then we got this entire tax here, but half of that tax we get as a deduction on the adjustments to Schedule 1, an above-the-line deduction or an adjustment for adjusted gross income. This then would flow through to the first page of the 1040. So in this case, they had $100,000 of the net income on the Schedule C. Then they had the taxes, self-employment taxes, calculated on that. Half of them, of those taxes, now are going to be deducted above the line adjustments to income, resulting in the adjusted gross income of the $92,935. Then we have the standard deduction of $12,200 because this is a single individual. And then the other thing you want to keep aware of, the other area that's going to be affected is, or could be affected, is line 10 of the first page of the 1040, which is the qualified business income deduction. And you can see more detail on it with Form 8995. So this is a fairly new law, and it's one of the more complex components of the new law because it is dependent on certain factors, including the type of industry that we're talking about for the sole proprietorship. So we'll go over some of these factors in more detail, but it's a good idea whenever you think you have a Schedule C, whenever you see a Schedule C business taking place, you want to have an idea of the different types of areas that will be affected on the tax return. You got the